Hello everybody. So today I want to go over a few proxies for Bitcoin. Of course, the ETF is still out there. Pure play Bitcoin is still out there. But a company built on top of Bitcoin technically should outperform Bitcoin. And that's the whole point of this BTC proxies. Companies that are building on the Bitcoin standard and that are using Bitcoin as their asset of choice. And of course, the poster child of these companies is MicroStrategy. I talk a lot about MicroStrategy on this channel. I was covering it 2 years back. I keep covering it. This is not a MicroStrategy video, so let me just tell you, it's under 1.8 on the market cap over Bitcoin to NAV, under 1.8. It's the cheapest I've seen it in a while. You'll see many of these are as cheap as I've seen them in a while. Semler keeps doing the business as usual, so this price to NAV really looks cheap to me. It keeps capturing the price to NAV premium, right? So you have a price to NAV of 1.76. So if you issue new shares, you capture the 0.76. That's the point of ATM. But by the way, that's not the only thing they do, right? They had a successful preferred launch, the Strike launch. I don't know if you've taken a chance to look at the stock price of Strike, but it's actually up quite a bit already, moved from 80 to 90, so there is some demand for that Strike preferred. He's indicated that he might do some of the ATM as well on Strike. And to me, the most crucial piece of information that we had at the last call for MicroStrategy, that is the guidance. It's the outlook, and they gave an outlook of a $10 billion BTC gain for 2025. And so that $10 billion BTC gain for 2025 means that MicroStrategy is technically trading at an 8.2 times price to BTC gain. So that's kind of a proxy for PE. PE in a BTC form, 8.2 times. Good luck finding a stock at the heart of an innovation like Bitcoin trading at such a low multiple. I still think that the market is heavily undervaluing MicroStrategy. And it's a stock that I'm very happy to own. It's a top position for me. It's a top 2 position for me. Another stock that I like very much right now, and it is Semler. Now, I love Semler very much at this valuation. They did a big buy recently, and they now have more than 3,000 Bitcoin. And thanks to that big buy that they did recently, now the price to NAV, market cap to NAV for Semler is a 1.46. So if you remember, not too long ago, this one was trading close to a 3x, and so thanks to that recent big buy that they did, the stock is now looking very cheap. It's 68% Bitcoin. If you buy the stock, if you put 100, about 68% of that 100 into the stock can be represented by Bitcoin. So I like it very much. What I like especially about QuantaFlow is that it has an actual business with actual revenue, actual cash flows, and an actual product. This is the product. The product is the QuantaFlow. The QuantaFlow is a medical instrument. It's a device that was doing very well at replacing an old 70-year-old test to detect early heart disease. And so peripheral heart disease, PAD, there's an old test. This is called the ankle brachial index test. It has been done like this for 70 years, and they had a better product that was able to detect earlier examples of a disease. It was doing the work much faster with less labor. And it was a very successful product until CMS, Medicare, decided to stop reimbursing it. And as soon as CMS decided to start reimbursing it, a lot of the medical practices that were using this product just simply stopped using it. Many of them still kept using it and keep using it, but now you have to negotiate with insurance or with the patient themselves for reimbursement. So there is a major slowdown due to the reimbursement. This is really the regulator picking winners and losers here. But as you can see, ever since the reimbursement's gone, the revenue has not fallen off a cliff. It's declining, but it's not fallen off a cliff. However, the business has fallen off a cliff. The business is much cheaper. And right now, at 68% dividend, 68% Bitcoin I think there's a very good margin of safety in that business. What do I mean by that? The enterprise value over sales is a 7x. Enterprise value over EBITDA is a 20x. But you see, that doesn't remove the Bitcoin. The Bitcoin is sellable. It's an asset that needs to be adjusted for, in my view, or at least in the way that I value these proxies, the Bitcoin proxies. So if you take the current enterprise value and you remove Bitcoin, you can see that you have 147 million enterprise value if you adjust it for the Bitcoin. So the enterprise value adjusted by BTC over EBITDA is actually a 7x. So this is a very cheap stock. This is a dual play between a medical product company and Bitcoin. And it looks very much like MicroStrategy used to look like in the very, very early days when the main software business of MicroStrategy was actually still relevant. I would argue for QuantaFlow, for Semler, the main business is still relevant. They're a synthetic Bitcoin miner in a way. They sell a medical instrument, they take the profits, they buy Bitcoin with it, in addition to being having an ATM and doing convertible bonds, copying MicroStrategy, doing the same thing as MicroStrategy. Moving on to another stuff that I like, that I've covered in depth on this channel. 2 months ago, I released this video, Mara, the hybrid strategy. I'm very happy. I got like 3,000 views on it or something. So lots of interest in Mara. Mara got much cheaper compared to when I made this video. It's now trading at a 1.23 price to NAV. Mara is 81% Bitcoin right now. So the business is almost placing, the mining operations are almost not visible in the business. Like the market is placing no value on the mining operations. And, you know, it's really strange to me because, yes, they do have older miners, but it fits their strategy of using free electricity. They use gas flare-ups. There's a lot of energy that is stranded. So Mara has a very different strategy where really the old miners usually would not make too much sense, but they make sense in the case of Mara because they go for this 1 cent a kilowatt hour intermittent electricity and they make money. So I really don't understand. 2 months ago, where my numbers were as follows, so feel free to adjust them down. I'm sure if I were to do a full analysis on Mara again, I'd get closer to 1.1 million in mining profits per day. But right now it's 1.4 million mining profits per day. 2 months ago, that's what I had found. 1.4 million in mining profits a day. And the price that they had to mining profit, so the Bitcoin bag adjusted enterprise value divided by mining profit was a 9.6x, so under a 10x, very similar to MicroStrategy's valuation here, under a 10x. And they also earn a yield. They don't just make money from the mining operations, they also earn a yield like Michael Saylor via convertible debt and via ATM. So I find this one to be truly undervalued. And if you look at the long-term chart, really it's as if we forgot that Bitcoin broke 100,000. It's as if Bitcoin never broke 100,000, as if we didn't have an explosive 2024. So I don't understand why this stock is this cheap, and I don't expect it to remain this cheap for long. And this is a stock that I've been accumulating, by the way. Moving on to a stock that many of you have requested, it's CleanSpark. So I don't know if I'm going to do a full video on CleanSpark's earnings just yet, but I can give you my commentary right now on the earnings. CleanSpark as one of the best miner fleets. They have young miners, and so the miners make a lot of money because they're newer miners. And so CleanSpark in their earnings that they reported a few days ago, they gave us some nice information estimating the value of their mining assets at 938 million. I wasn't too far off of that number, by the way. And they also outlined their debts. So what we can do with CleanSpark is we can look at the adjusted enterprise value. So we have enterprise value. So right now the market cap is 2.95 billion, so call it 3 billion. We remove 2.8 billion worth of assets. Note the Bitcoin, of course, is worth more right now than a few days ago because they accumulated more Bitcoin, but the mining equipment you can assume is worth a little less, so I'm reusing 2.8 billion and 747 million of debt. Again, this has not changed too much. So what do we get in enterprise value? We get 908 million enterprise value. And how much money do they make? If the enterprise value is 908 million, how much money do they make? Well, they mined in Q1 162 million of revenue, of worth of Bitcoin revenue. So 162 million of Bitcoin was mined, and using their gross profit numbers, I get a Bitcoin profit of 92. And so if I analyze that, it seems like their Bitcoin profit, assuming, kind of dumbly assuming everything stays flat, or assuming that the price increase of Bitcoin goes line in line with the price increase in difficulty, assuming the difficulty rises at the same time as the price of Bitcoin. I'm just annualizing it, taking the quarterly profit, annualizing them. So that means an annualized Bitcoin profit of 368 million. Reminder, they had an adjusted EV. If you remove the value of a Bitcoin, the value of the miners, and you add back the debt of 908 million. So the BTC bag, asset bag adjusted enterprise value is 908. You divide that by 368. That's a BTC BAB adjusted EV divided by BTC profit of 2.49x multiple. This stock is very, very cheap. I see a lot of chatter of people saying, oh, this stock's not doing anything, I'm going to sell it. Well, I can tell you, I'm not selling my stock when I'm calculating a 2.5x multiple. I am not selling that. Failing companies with tons of debt are trading at multiples of what, 7, 6? So this is cheaper than the multiple that many failing companies show. And even if you look at the trailing 12-month EBITDA, which they reported, right? And if you take the BTC BAB adjusted EV divided by TTM EBITDA, you get a 2.8. So you get something very similar, under a 3. This stock may very well be the cheapest stock out of all of them, but of course, in CleanSpark, you are taking on more operational risk, right? Because the price to NAV, you can see, is a 2.86. So the market is giving you some intrinsic value in the form of operations, right? If you compare that to Mara, the market is giving no credit to the operation. So Mara, in a way, is much closer to, say, a Bitcoin ETF than CleanSpark, who is getting a lot of credit for their operations. But that's understandable. And despite that credit for their operations at the 2.86, despite that number, they still trade at a 2.5 multiple, per the way I calculated. And we can debate how this is calculated. This is obviously not a gap straightforward fee, and we can all debate how this is calculated. Get ready on having pretty insane PEs on MSTR in Q1 if you're going to use PEs and not recalculate it with your own metric, with your own number. Let me conclude this video. This video is getting a little long. Just the spreadsheet that you can access on my Patreon. I added Hive, I added Hut8, and I added Riot. All of these stocks I find slightly less interesting. I like Riot the most out of the 3, but I find them slightly less interesting than the 4 that I just discussed. But feel free to look at them and tell me what you think of all of these stocks in the comments section. As always, this video was not investment advice. It was not financial advice. It is just entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.